Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 15th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. One thing you'll see is the previous session. The ES was able to push through previous three-day highs, was able to close near the highs of the session after a bullish start to the day, and finished through 45.50. The key level we mentioned would be important here heading into this next stretch of time here. If prices push through that area and reject or fail to hold above that area, we could be back down within the range. But as of right now, the fact that it's pushed through that area here and continues to show an upward development of the PIMAs and the trend, this could open up a continuation up toward the 46.25s, 46.20 zone here. That is the previous month's high price, and price right now, especially with the contract rollover gap, has pushed price back above the previous month's midpoint, is now through the previous month's close. This would be the next key zone above. But again, can prices hold above 45.50? Today would be a day perhaps where we see a bit of a fade after trend day. So a rejection of the previous session's high could open up a return back toward the previous session's midpoint. Ideally, bulls would defend and push prices back higher. Now, after a relatively high range day the previous session, we could see a relatively low range day. But based off of how we've developed here over the last couple of months, and especially over the last few weeks, we really haven't seen much range below about 30 points. You know, this has been about where we've been. You can see right here, the 10-day average is 35.55. The 5-day is 30.85. 30 is about right here, and every single day moving backward has been about that amount of points. Is today going to be another day where we reach at least 30? In which case, that means we still have another 20 plus points to go. 9.5 points range here as we head into RTH. The RTH Open. We do have pre-market economic data points coming out, export price index, import price index, etc., and additional economic data reports, including Michigan consumer expectations and sentiment later on. So again, there could be a bit more volatility to come. So right now, a rejection of this zone could open up a pullback and a fade after. Bulls want to defend a fade after for perhaps a check mark trend day higher that could be at least 30 plus points of range today. All right, let's take a look here at the NQ. Now, the NQ for the most part here has been very, very narrow. Today already throwing off just 40% of average range. You can see the last several days is a very narrow 4-day range, now a 5-day range. We do have that upward trend that's still kind of in play, this upward channel that's developing here. Can price continue to make way toward the previous month's high? Right now, again, the bounce happened here off of the previous month's midpoint, contract rollover gap here up, and so far the previous month's close price has been bid so far. So again, building energy for what could be an ultimate continuation up. How does it play out today? Any early pullback could be defended for a continuation higher until proven otherwise. Taking a look here at crude oil. With crude oil right now, this one has been so tremendously bullish. If you just look at just the recent price action, it's been straight up with only one failed new low here to kind of kick things off. And then you also had one small one right here within range. So nothing much at all. Other than that, it's trend breakout, hold, 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 breakout, hold. It's been very, very strong. And as we've noted before, 94s is likely the next target above. 84 here is the edge. It just smashed through the edge and has just rallied straight to 91s. Today's high 91.15. And while we may see a little bit of a pullback here, again, bulls will continue to defend this thing until we hit the next edge above. That's 93.64 as the key range edge, and then 94 as the market structure edge. Once we get to that zone, perhaps we could fade a bit back down and maybe develop a range at these highs. There's, again, a range that could be developed somewhere in here and somewhere in here to kind of backfill some of this price action. So right now, hard to fade into weakness here, or fade that strength on any sign of weakness, because it has been fleeting. The weakness has been fleeting for a continuation higher. This thing on a mission for 94s as of right now. Looking at gold futures, you'll see right now gold futures has bounced off of the 200-day moving average and has come shy again of the previous month's low. I've been mentioning before that this thing just hasn't necessarily gotten highs or lows lately. It's converging. It's a converging market right now. So last month when we were dropping here, the idea was we take out this low, and it got close and bounced. And then over here, we didn't take out a high. We just formed a sharp high off the 1980s and dropped downward. We were looking for a move into the previous month's low, but again, falling shy yet again and seeing a little bit of a bounce. Is this enough of a bounce to turn things around a little bit? And how much? Because right now prices are converging so much that we really don't have a whole lot of room to run right now before expansion needs to be seen one way or another. If we do bounce off these lows here, 1960s kind of that baseline at the moment, and that could be pretty much the range here until this thing's ready to see some definitive movement away from this triangle. This pattern's been in development here for quite a while. Ever since the strong high, it was clear that the first wave was down, but since then, since that move to say 1950 here, that's pretty much been it. 1950, and that's actually year-to-date VWAP right now as well. And that's kind of been it. So at some point here, the next move is likely coming. Will it be back to 1830 and taking this thing break even for a second year in a row, or do we somehow rally back to highs? I think right now, based off the strong higher high here and how this thing is played out, the expectation still could be for a return to 1830 down the road, especially if prices start to give up the market structure lows here at some point sooner than later. All right, taking a look lastly here at the YM. The YM right now, a high range day in the previous session. High range day here, starting to see a little narrow range here as we head into pre-market economic data release here. Again, any pullback could be a fade after trend day that takes you back towards, say, 35.2, maybe into the previous session's midpoint. But if that pullback happens, you could see bulls defend and keep things kind of range bound today. A lot of times after high range days here, high range 400-point days, you'll see a smaller range day afterwards. Not so much in this session here, but many times you see a high range day, you're going to follow with a low range day. Maybe today could be that. So if we do trade in a low-ish range, maybe 200 points, maybe 250, 400 was a high range day yesterday. We could be on the lower end of that as averages have been dropping. So any pullback early on in the day could be bought for a push back up. Failure to hold the midpoint would be huge. So if we close below the midpoint today, that'd be significant, as it would fail to hold that top end of the key range and could be an opportunity to snap it back to 34,619. So keeping an eye on the edge here at 35,177. All right, that is it for now. We'll see how this plays out heading into the weekend. Have a fantastic weekend. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.